Well, it's good to be here today. I enjoyed the comment on the bulk sale because 4 years ago I introduced legislation to stop it then before it started. And the bill said, in fact we got out of the House with a unanimous vote to the Senate, it said if you're a bank, Freddie and Fannie, and you have a foreclosure, that you can hold that foreclosure for up to 5 years, you can lease it out, you can enter into a lease option to buy back from the original buyer if you want to, and you can take those properties and gradually release them on the marketplace so you don't just ruin the marketplace like happened today with just tremendous amounts of liquidity out there as far as assets on the marketplace and no buyers and driving the value down, and it moved nowhere in the Senate. But the concept of taking assets owned by the federal government, because the taxpayers own Freddie and Fannie at this point in time, and taking those assets at a huge loss and bulking those out to some foreign bank or other entity, not knowing what they're going to do with them, is ridiculous. What they ought to do is take the foreclosures, work with local realtors. You have management companies can manage the properties, lease them out, and then when the market's ready, they can list them with you. You can sell them when the market value is coming back, and we can make sure the government does not lose money. But people aren't thinking the realistic way that they should think. Now you've heard some debate today about Freddie and Fannie. We need to abolish Freddie and Fannie. Now the problem with that concept is they're outperforming the rest of the marketplace. Like it or not, the default rate with Freddie and Fannie is lower than the private sector. Now I'm not saying they're doing a great job, they've made huge mistakes, but their default rate is lower than the private sector marketplace. In 2008, when the lending industry had lost $2.4 trillion, Freddie and Fannie only lost $120 billion and they own 70% of the homes. Now that says something was done right at some point in time. The problem with Freddie and Fannie is they went public. In about 2001, when the market really started to heat up, they started losing market share. But the problem is that was what they were designed to do. The GSEs were designed to bring private sector dollars into the secondary market and buy loans from banks, meeting a conforming criteria. But what they did, instead of pulling back as they should have, they went out and aggressively fought for a larger market share, buying predatory loans instead of buying subprime loans like they should have in other loans. They were being pushed by groups like Countrywide, who sold mortgage-backed securities. And the problem with the mortgage-backed securities they bought and they sold was that when investors bought them, they were stuck with the losses. Now, not one investor in this country has ever lost a dime on a mortgage-backed security from Freddie and Fannie. The losses were taken by Freddie and Fannie. If you have a bundled group of homes out there that they sold off, as loans went bad, Freddie and Fannie bought them back, replaced them in a portfolio with loans that were performing. The problem with the private sector mortgage-backed securities, they're bundled in a way that the servicer cannot take the bad loans out, because the minute you touch the bundling, you're liable for all the losses with the investors. So all the money being lost in the marketplace today, I know you're looking at it funny, but it's true. All the money that's lost is lost by the investors. Not one bank was held accountable for making a bad loan. And in 2001, I introduced legislation that said, let's define subprime versus predatory. Got it to the Senate 6 times. What that meant was, a true subprime loan is an individual who's had a downturn in their lifestyle at some point in time. They might have got behind on a few payments. Their credit is less than sterling, but they're in a position today where they can adequately afford to buy a house. They have a down payment. They have the resources to make the payment. But their tarnished credit history, they might pay a little more in points. They might pay a little more in interest. So they're not a prime, but they're subprime. But predatory loans, when you don't basically confirm they have a job, the credit history's never been checked, they have no FICO score on record because you didn't check it, and you just make a loan to somebody who's on the dotted line, that's a predatory loan. And if we had done something about it all the times I sent it to the Senate, maybe we wouldn't be in the problem we are today. But let's see, where do we go from today? Do we get rid of Freddie and Fannie without a viable alternative? I don't think we do. I introduced a bill that the National Association supported. It's called We Create a New Facility. And what the facility does, it takes all the assets of Freddie and Fannie in, and we take those assets as they go bad, we hold them up to 5 years, lease them out with the management company, then we sell them off to realtors and sell them one at a time as the market comes back in different areas, so we don't put a glut of homes in one given area. Plus you go back to the original concept of what they were supposed to do. Their whole goal was to provide liquidity to the marketplace when it's impacted financially. So when there's not adequate lending available out there, Freddie and Fannie is supposed to move forward in the marketplace and provide more loans out there when the private sector is pulling back. But from 2000 2001 to 2007, when the private sector was moving up rapidly, they should have been pulling back. And the GSE should never be above 50% of the marketplace, depending on market. If the market is really, really doing well, like it was in 6 and 7, where there's adequate loans out there from everybody else, they might pull back to 30%, 25%, or 20% of the market, because they're not needed out there. But they keep the market competitive based on the rates that they're charging out there. So you have a conforming marketplace, adequate place to sell the loans off to, but you're not overheating the marketplace like what happened with the investors from Wall Street in 2004, 5, 6, and 7, which got us where we are today. But what we're doing today, we're using real estate as a cash cow. We're raising the FHA fees, and none of the money's based on any type of risk. It's going to the general fund to offset something else. Freddie and Fannie fees are going up too. No purpose at all other than just to raise money for the government. Now, you have to look at that and say, what's wrong? Now, it took me 8 years to have conforming loan limits in high-cost areas enacted into law, which means that we ended up to $700,000. Instead of the conforming rate was about $420,000, $435,000. And you know, between Freddie and Fannie and FHA, the best loans that they've made are conforming loan limits in high-cost areas. And what's the first thing we do when the market starts to come back? We eliminate it. Now think about it. Are you better off lending money to somebody who has the ability to repay, who makes more money, or lending to somebody who makes less money and it's a little tougher on them? So we've taken and placed more of a burden and a risk on all three agencies by eliminating the quality loans that were safer and performing better. And you look and say, what do we do in the future? Do we need FHA? Absolutely. But we're doing everything wrong. We're raising the rates, raising the fees. And let's talk like public housing. I helped the San Bernardino County Housing Authority become a move-to-work authority. Now, move-to-work means if you're going to be in public housing, we require you to do something. You're not going to be here your entire life. We want you to get some job skills. We want you to get some educational training if you need it. And we want to help you get a job and go on your own. And San Bernardino County Housing Authority was one of 30 pilot programs I wrote into law that allowed them to do that. They've serviced more people with less money, and they're outperforming every government housing authority that's not a move to work. It works. It's amazing what people do if they're required to. Now, helping somebody, giving them a helping hand does not mean putting them on a government payroll for the rest of their life. And the problem with politicians is they don't trust the people who elect them. You need to trust these people out there. Make the director accountable, hold them accountable for what they do, but trust them and allow them to work in the marketplace. But you're overregulated. Now, the interest deduction on housing is not going to go away. So you keep thinking that that's going to go away and you're not going to be able to write your interest off on your home, so like that. That's not happening. I wrote a bill. We didn't even need to bring it to the floor because not one committee said we're going to do that. Now, presidents give a great speech and say we're going to do this because we're going to punish the rich. Well, if you're really rich and you own a home over $1 million, you can have a second home right off anyway, so it doesn't matter. So why would you even go there? But we can't continue to punish the industry. We need to help this recovery in this country. And the Inland Empire here, if we're going to turn this economy around, we've got to get the housing industry back. If you could get the housing industry back in this country, unemployment would be the lowest it's been in our region in history, based on where we are today. Just putting construction workers back to work, building homes, building highways, people would be doing very well in our area. And if you get that market going, guess what brings the price valuation of homes back? The new home market. When he starts raising his home prices $20,000, everybody else follows him. And you're basically, aren't you working on a percentage? It's not bad for you. It's not bad for people who own homes. People right now let their homes go back because they're watching what's happening in the marketplace and they say, is it going to be worth less next year than it is this year? The buyer comes in and said, well, am I better off waiting 6 months or 9 months or a year to buy because it might be cheaper then? We've got to stop that. So let's find a real bottom, and I think we really have found it. Looking at what's happening nationally, I think we've hit the bottom. As long as we don't do something stupid with Freddie and Fannie, like sell a bulk amount of homes and flood the marketplace when there's not a demand for that many homes. Now, you probably have a board around here somewhere that says we have these buyers and we need homes for it. Maybe you have 50 buyers. But if we come in here and put 1,000 homes in the marketplace at one time, what do those buyers do? They start lowballing every bid out there to get the home at the cheapest price they can get it at, and every other home in that community around it, the home valuations drop the same way. And people say, well, the government's talking about people who don't make their payments, we'll just take and drop the principal in their home down to where they can afford it. And they say, well, if they're going to do that for them and they're not making their payments, why should I make my payment? Now think about it. We're asking people to think the wrong thing. Now, government should be there to create an environment that people have an opportunity to prosper in. Make sure there's liquidity out there for loans. Make sure lenders are doing the right things. The bill I wrote says a lender who makes a loan must meet these underwriting standards. They're going to pay a guarantee fee going in when they sell the loan, and the investor pays a reinsurance fee when he buys a mortgage-backed security, just as a backstop in case something goes wrong. But the lender doesn't get a discount for being a big guy. If you're a local savings and loan, your local community bank, if you're a local credit union, you get the same rate as Bank of America, Wells Fargo do if you provide a quality loan. So there's no discount for volume, it's based on the quality of that loan. But if you are an approved vendor and you write a bad loan not using the underwriting standards, guess what? You're buying it back. And that's not unreasonable. We're saying if you do what you're supposed to do, now unforeseen things happen out there, then you're fine. We'll buy that loan, we'll sell it off, the market will continue to work, and if you have to think about a government guarantee, 15% of the money GSAs gets come from other countries. And there's not another country out there that doesn't have some form of a guarantee by the government, not one. When every nation in this world, their housing market plummeted when ours did, no two had the same financial structure. So they can't say it's the way we mortgage homes here and we finance them, it's not. There was a global glut and illiquidity that occurred at the same time, and the market plummeted because of it. Countrywide, give you a great example. They wrote all those bad loans. Now, I hope there's no Countrywide executives in the room here, but it's true. They wrote predatory loans. What happened to Countrywide is they got stuck with those loans when they couldn't sell them off on the secondary market. Nobody would buy the mortgage-backed securities. They had about $25 billion worth of homes, and they were rotten homes. Most of them were going into foreclosure within 90, 120 days, and they got stuck with them and they went under. Horrible. But they deserve what they got. The problem is a lot of people lost a lot of money in the process. That should never happen again. Was it a lack of regulation? Absolutely not. You know, you had bank regulators telling banks that you had to use these type of criteria to make a loan, but they were revolving them so quick and so many coming in and out the door, and when you had some Wall Street agency rating them as AAA, they must be good loans. And what, you know what, they're already gone, so that's not a bank regulator's problem, because B of A sold them off, Countrywide sold them off, they're all gone. So there's no liability in part of the bank. But there was a problem there. Nobody ever dreamt a bank would do everything that was in their worst interest. And they did. And some of them lost a lot of money, some of them got through it. Some great examples, if you look what happened to some of our local banks. Remember Pomona First Federal, how they did a great job in the region? If we would have just modified mark to market, that's basically marking on your books what something is worth today. If we'd have just suspended the hardcore principles of it and worked with these lenders, they'd be in business today. What we did, we said, you made a loan at X amount of money. I lent 80% on a $100,000 home. That home is not only worth $70,000 now, so you have a prospective loss of $10,000, so we made you set an additional $10,000 in losses aside. Well, they didn't have the assets for that. It's not that the loans weren't performing. It's that the regulators were making them set aside prospective losses that might occur in the future when they've already lent the money. Now, common sense, if they've already lent the money, well, they can't lose more than they've already lent, right? So why not bend the rules a little bit? The thing that's happening in the commercial market, and many of you are facing that today, is most commercial loans are fixed 30-year loans with a 5 or 10-year call. Now the regulators are coming into the banks and the lenders and saying, well, this guy's wanting to renew his loan. His occupancy rate's 92%. He's got adequate resources to make the payment. He's current. But the problem is that that piece of property is worth $20 million when you lent 14 on it. Now it's only worth 13, which means, oh, you can't lend more than $9 million on it today. So if you want to extend that loan, you need to come up with $5 million in cash. And the guy didn't have $5 million in cash. So let's don't take a prospective loss on something that's performing. Let's modify the rules and say, okay, if that loan is current, allow the loan to continue. And if it goes into default, it's a different situation, but you're not lending any more money on it than you already have in it today. So why foreclose on it, sell it at less than it's worth, and drive everybody else's market value down in the region? So sometimes common sense has to prevail over stupidity. Let's don't use hardcore rules and say we've got to do this because the rules say that. Rules say many different things in different situations. This country faced the worst downturn we've faced since the Great Depression. Now, I got beat up a little bit for voting for the first half of TARP. That's when we put $350 billion into the banks. Y'all remember the bank giveaway? We made $20 billion profit on it. Anybody ever tell you that? They paid it all back. And we made $20 billion for lending them the money. The problem we had then, I'm on financial services, so I chair national monetary policy and trade, so I talked to Bernanke and Paulson privately 4 different times. I met with Bush's chief financial advisors. And if you saw what was happening in this country, it was scary. There was not one bank that could withstand a run. Not Bank of America, not Wells Fargo, not Chase. Nobody could withstand a run. In one 24-hour period, the money market system had $500 billion removed. They withdrew it. And people were putting their money in 90-day Treasury notes for almost 0% because they just wanted to have some place that was safe. They figured the government's safer than my bank. And they were going to the bank, taking the money out, and putting it in the Federal Reserve and Treasury. The problem is that the banks were becoming illiquid. Their money was already lent out, so you can't get money from nowhere. The money market groups were out selling assets for fire sale prices just to create cash to give people their money back. Gold spiked to the largest percentage in 24 hours in history. It was scary. So we had a choice. We can raise FDIC insurance limits to make people realize that your money's safe. We're standing behind banks, and we put money into the banks, not as much as they needed, but we put money into it so people sat there and said, oh, everything's good. And guess what happened? It worked, because in my business, perception's reality. The perception was the government standing behind the banks, the government's going to guarantee your money, and people quit drawing their money out of the banks. It worked. And we made $20 billion in the process. So we did what we had to do. You didn't want the Great Depression coming again because it would have been horrible. We did what we needed to do. Now, everything since then I voted no on, because all we've done is give away your money. The stimulus bill for $800 billion was a waste of money. We got nothing to show for it. Giving money to, I mean, it's one thing to say you're going to help General Motors. It's another thing to say you're going to give them the money and give it to the unions. And that's what they did. They wiped out all the stockholders of General Motors and gave it to the people who didn't earn it. I'm not saying that employees don't earn something. I'm saying, why would you give away, that many dollars that are taxpayer dollars and give it to some private sector group? The problem with Freddie and Fannie and where they went wrong. Now, Fannie Mae lost money one time, 1985. Freddie never lost a dime. Did you know any banks that did that well? The problem was they went public. And when they went public, they fought for market share. So like I said, from 2001 on, instead of pulling back, they went aggressively out there to get market share so they could say to the stockholders, see, we're retaining our market. And they lost a tremendous amount of money doing it. The new facility says the taxpayers are going to own it. Because if the taxpayers are going to be at risk, they should benefit from the profits. Now, Freddie and Fannie were always profitable under the original system. A new facility will be too, because we'll make good loans. We'll charge the bank a guarantee fee when we buy the loan, and when we sell the mortgage-backed security, we'll charge a reinsurance fee to the person buying that mortgage-backed security to make sure the taxpayers are held harmless. And if the guarantee fee doesn't cover it, covers all the cost of the operation plus a guarantee set aside with Treasury, the reinsurance fee will. And if it's a bad loan, the bank's going to buy it back anyways and make the loan. So there's a lot of things we could talk about. Let's see, what other issues are important to you? Yes.
SB 2012.
Which is what?
Is the $75 for a recording fee on per document.
Well, that's falling back to what they tried to do a few years ago. They tried to come in with this idea, and Jerry Giovanelli, who's your director in the National Association of Realtors, we fought this. They said, well, why can't we have banks be one-stop? Well, what's one-stop? Well, the bank should be able to sell the home, so now the teller becomes a realtor. The bank should be able to do the title policy. The bank should be able to make the loan, and the bank should be able to be the escrow. Now, I've never heard of a larger conflict of interest in my entire life. Now, in the committee when they brought it up, Barney Frank was chairing them. I said, Barney, let me ask you, and Barney and I get along pretty well. I said, let me ask you a question, Barney. So, the teller wrote the sale because the client coming in was standing at the window and they wanted to buy it. And you wrote a title policy on it, and the lender made the loan, and your escrow closed it. What if there's a defect in the title? Who's responsible, and who's going to hold them accountable? When it's the same person. And they just looked at me. It kind of died real quick. But the whole concept of separation of powers, I'll call it, because you know what you do, you sell homes. If you're an escrow, you understand your job. If you're a title company, you know what that means. And if you're a lender, you understand underwriting standards. And you put all of those together, and you have the real estate industry in the market that works well, because there's competing interests that hold each other accountable. But to charge fees for the flat sake of charging fees is stupid. I never voted for tax increase, I never will. That's a tax increase on our industry. It's like raising FHA fees when you want to get a loan, like raising the fees when you go to a Freddie Fannie loan. It's nothing but generating funds for the Treasury, because not one dime is based on safety and soundness. Now, if the problem FHA is in today, FHA has the lowest default rates in the entire industry. So their problems don't come from foreclosures, their problems are due to the fact that the market value dropped on the houses they lent money on. Period. Now, if we're sensitive and work with them and don't force everybody in foreclosure, let's let the market value come back. The reserves will be back in FHA like it should be, because the FHA loans that they made in the high cost areas are stellar loans. They're performing amazingly. In fact, the money they're making is from those loans, the very loans we said stop making. That's how brilliant we are in government. So some things don't really work. Short sale. By June, you'll be able to have a short sale, submit it to Freddie and Fannie, you'll have a response back within 30 days, and you'll have final approval within 60. There's a reason to extend it. You'll hear week by week why it's having to be extended. But we're saying we have to have a date certain, because you can't tie up a person selling a home and a person who wants to buy for an indefinite length of time. You can't open an escrow in October and still be playing games in May, because you're going to lose your seller. And when the seller's gone, that buyer's underwater already. So let's get a date. If you're really concerned, if you're going to have a short sale to begin with, if the concept works, have a date when you're going to get the first response. It'll be 30 days. Final approval 60 days, unless there's a reason it has to be extended for some complicated purpose. Then they have to tell you what that is and show you proof that it really occurred. And this common sense thing we can do is like in transportation. I introduced a bill in 2005 that said if a state environmental process like we have CEQA in California, California Environmental Quality Act, if it meets or exceeds federal standards, then you shouldn't have to do both. And I allowed 5 states to do it. California is the only state that took advantage of it. We now process the project 17 months quicker than anybody else, and we have a 30-month delivery that's ahead of everybody in the industry in every state. The new transportation bill that we just passed out yesterday on extension had my language that allows your cities and your counties to do the same thing. It says if you have a grant coming from the federal government, now you have to wait for the money to arrive. Once it's approved, start the project. You can be a year down the road when your money finally comes in and you can backfill your general fund with the money that comes in. But start the project now. Plus, don't make them wait around 24 months to sit there and get the environmental process approved back from the federal government. Use the state process, it meets and exceeds standards, and get your project going. There's common sense things we can do in government if we'll do it. And if we do those things, the economy will be a lot better. Let's don't regulate for the purpose of regulating. I mean, if there's something that needs to be done, okay, so be it. But we do not need to regulate the real estate industry more than it's regulated right now. We need to make your job simpler. How thick is that stack of papers you have to fill out? And if you miss one I or cross dotting a T, you're held accountable and you're sued. That's ridiculous. I mean, we've got to change it. Make it easy. Simplify it. Make it where you can do your job, process it quicker, get people into a home at the best price you can get them into. And if we'll turn that back to you and understand that you know what you're doing, we don't. If we let you do your job, this economy will turn and rebound and we'll be back to what we all believed in. But now, if you look at our environmental standards, we think more about flies and rats than I mean, our grandparents used to swat flies and poison rats. Now we set aside habitat. Give me a break. Who wants to live next to rat habitat? Raise your hand here. Now, this true story. There's a project here in Colton. It's now Rialto. It's called Lilo Creek, and they have to set rat habitat aside. This seriously. Now, there's houses being built there. If you have a trap in your garage and you catch a rat, you committed a felony. I'm serious. Because it's an intentional taking. Now, what they had to do, the rats, there's this, you've seen Lilo Creek, it's a big wash. Well, the problem with the little rats are too stupid to get out of the wash when it rains. So guess what happens? They die. And when they start dying off, they become endangered. So we're going to be smart. We're going to establish rat habitats. There's a little island out in the middle of Lilo Creek. They had to remove all the vegetation because rats don't like vegetation, so you got to remove all that. And you got to plant them out there, and you got to feed them, and every weed you got to de-weed to keep them out. and we're trying to provide safety for the San Bernardino kangaroo rat. Now, that's not the Riverside because they're cousins, doesn't count. You got to have, your cousins, you're different. So we do all this stuff for the sake of our environment. Last time I checked, we were part of the environment. They're trying to kill us. So if the government took as good a care of us as they do rats and weeds, we'd be much better off. We have about 20 million acres in Arizona it's called an environmental preserve. We do not let the Border Patrol go in there, and it's the main route for drugs and weapons and illegals into our country. They can go in there, but our guys can't. And I introduced Bill Stoppett, and they says, well, what's the purpose? And I said, I think our children, our jobs, and our national safety is more important than weeds, rats, and flies. I really do. And she says, yeah, you're right, and walked away. So I guess we won that one, but I'll get bashed in the press before some. But why don't I take some other questions? Yes, ma'am. You need a, I can't, you need to yell.
Do you know anything about moving the process for short sales on FHA loans?
Yeah, within,
Why just wait to responsibility FHA if it sits there forever?
well, but in June it changes. Yeah, it changes. You'll get a response in 30 days, and in 60 days, you have an answer.
Even if it's FHA?
Yeah, you have an answer. Yeah.
Can you repeat the question?
Repeat the question.
Why do you have to go through such a long process with FHA and we never get an answer? And I said, you will starting June. June, you have a 30-day period. They have to give you a response. We know which way you're going. It's probably a yes or probably a no. And then 60 days it has to be done. If they don't complete in 60 days, they have to give you a definitive reason why they weren't able to process.
And that's already in motion, Jim?
Yes, it'll start at FHFA. It starts in June the first, I think. Yes. Yeah. Yeah. So your job should be a little easier. Anything else? Thank you for having me. God bless.
One more.
Oh, yes, sir.
I couldn't let you go without asking this. Back to the bulk sale issue.
Yeah.
What do you think the future of that is this year or next?
I've introduced the bill. I'm going to do everything I can to kill it. I've met with Geithner, Bernanke, and I said, this is the stupidest thing I've ever heard. First of all, you wipe out all the stockholders of Freddie and Fannie. You make the government in charge. It's their organization, so that the taxpayers are liable. Then you have assets coming in, and you're just going to give them away and take huge losses. Why would you do that? And I talked about the same thing. You heard the president, it's really funny because 3 years after I introduced the bill, you heard the president said, well, maybe we might start leasing homes out from Freddie and Fannie. Well, I did that 3 years before, but he's still not done anything on it, except giving a speech. We need to do everything we can, and we're trying to do that to make sure that does not happen. We've had meetings, we've had with the Secretary of Treasury and HUD in financial services and say, don't do it, it's dumb. There's a much better way to do that. If we're going to take and create business, let's create business for Americans. There's leasing agents out there that would love to lease your properties for you. So that's not a problem. The government doesn't have to do it. Just contract it out. Pay them a percentage of the rents. They'll do it. And then when the market's coming back, tons of realtors will list that property, the local realtors. And the goal is to do it locally. If you're going to have properties managed, have local management groups manage them. If you're going to have properties sold, have local realtors sell them. Don't sell it off to some foreign bank or national group on Wall Street that's going to just bulk them out. Deal with the locals. It can be done very well. We've done it in the past and it worked.
Good.
Thank you. They're outperforming the rest of the marketplace. Like it or not, the default rate with Freddie and Fannie is lower than the private sector. Now, I'm not saying they're doing a great job. They've made huge mistakes. But their default rate is lower than the private sector marketplace. In 2008, when the lending industry had lost $2.4 trillion, Freddie and Fannie only lost $120 billion and they owned 70% of the homes. Now, that says something was done right at some point in time. The problem with Freddie and Fannie is they went public. In about 2001, when the market really started to heat up, they started losing market share. But the problem is that was what they were designed to do. The GSEs were designed to bring private sector dollars into the secondary market and buy loans from banks, meeting a conforming criteria. But what they did, instead of pulling back as they should have, they went out and aggressively fought for a larger market share, buying predatory loans instead of buying subprime loans like they should have in other loans. They were being pushed by groups like Countrywide, who sold mortgage-backed securities, And the problem with the mortgage-backed securities they bought and they sold was that when investors bought them, they were stuck with the losses. Now, not one investor in this country has ever lost a dime on a mortgage-backed security from Freddie and Fannie. The losses were taken by Freddie and Fannie. If you have a bundled group of homes out there that they sold off, as loans went bad, Freddie and Fannie bought them back, replaced them in the portfolio with loans that were performing. The problem with the private sector mortgage-backed securities, they're bundled in a way that the servicer cannot take the bad loans out, because the minute you touch the bundling, you're liable for all the losses with the investors. So all the money being lost in the marketplace today, I know you're looking at it funny, but it's true. All the money that's lost is lost by the investors. Not one bank was held accountable for making a bad loan. And in 2001, I introduced legislation that said, let's define subprime versus predatory. Got it to the Senate 6 times. What that meant was, a true subprime loan is an individual who's had a downturn in their lifestyle at some point in time. They might have got behind on a few payments. Their credit is less than sterling, but they're in a position today where they're going to adequately afford to buy a house. They have the down payment. They have the resources to make the payment. But their tarnished credit history, they might pay a little more in points. They might pay a little more in interest. So not a prime. Well, it's good to be here today. I enjoyed the comment on the bulk sale, because 4 years ago I introduced legislation to stop it then before it started. And the bill said, in fact we got out of the House with a unanimous vote to the Senate, it said if you're a bank, Freddie and Fannie, and you have a foreclosure, that you can hold that foreclosure for up to 5 years, you can lease it out, you can enter into a lease option to buy back from the original buyer if you want to, and you can take those properties and gradually release them on the marketplace, so you don't just ruin the marketplace like happened today with just tremendous amounts of liquidity out there as far as assets on the marketplace and no buyers and driving the value down, and it moved nowhere in the Senate. But the concept of taking assets owned by the federal government, because the taxpayers own Freddie and Fannie at this point in time, and taking those assets at a huge loss and bulking those out to some foreign bank or other entity, not knowing what they're going to do with them, is ridiculous. What they ought to do is take the foreclosures, work with local realtors. You have management companies can manage the properties, lease them out, and then when the market's ready, they can list them with you. You can sell them when the market value is coming back, and we can make sure the government does not lose money. But people aren't thinking the realistic way that they should think. Now you've heard some debate today about Freddie and Fannie. We need to abolish Freddie and Fannie. Now the problem with that concept